How big is the problem with condos? And is downtown Toronto the worst? Hi everyone, Ian here. Today we want to continue from our last video, which talked about the entire Greater Toronto Area's real estate market trends. And today we want to zoom in to the condo market. If you see the graph on the screen, this is basically the average price for the entire GTA condo market over the past 9 years, since 2016 until now. The latest data point is July 2024. And you can see that the latest data point we have, average condo price in GTA, it's $718,000. Okay, that includes everywhere like downtown Markham, Oakville, everywhere, right? In the GTA. And from this graph, you can see, despite some fluctuations, and since the peak of 2022, which we reached a whopping 808,000, which is almost like 100,000 more on average than today's price. It has been fairly stable in the past 2 to 3 years. In fact, if you compare the second half of 22 until now, the price like barely changed. I mean, despite some seasonal fluctuations. And if you look at the actual data point in early 2021, well, September in which is like 3 years ago, the price is almost the same. So our condo price are basically the same on average comparing to 3 years ago. In 2021 earlier and 2020, like which is when COVID started, the price was actually lower, right? So 2021 was when condo markets started to really rise after they went through that fluctuation during COVID, because the first year of COVID, 2020, remember that fall where nobody was renting condos, nobody wanted to like live in condos, and there's a lot of new inventory for both condo sales and condo lease listings, and that was a tough time, right? Like 4 years ago. But then after that, the rates started dropping to the bottom, and in early 21, condo market really picked up, and price has been sort of the same ever since. So that's why we have a lot of buyers who are selling right now who bought within these past 3 years, and they're saying they're selling at a loss, right? Because there's also real estate agent fees. There's also Toronto has like double land transfer tax. There's a lot of cost involved with selling. And if you bought anywhere during this time, God forbid, like, you know, if you bought like at the peak, of course, like there's even an obvious drop on price. But anywhere else you bought during these 3 years, likely you're not making a lot of money if you sell right now. And a lot of investors are doing that because their mortgage is coming up for renewal, and they find the cash flow is quite negative, right? I did a simple calculation that if you renew your mortgage right now, even today, after 2 rate drops, you're still carrying anywhere between 1,000 to 1,500 if your leverage ratio was higher than like 70%, right? So there's still a big negative cash flow for those mortgages that are coming for renewal. And in my calculation, buyers are likely not going to fundamentally change their view on whether to buy a condo right now or rent a condo, because renting condos is cheaper right now than buying, right? The buyer will change the mindset after another 1% to 1.5% drop in the interest rate. So right now, our Bank of Canada benchmark is at 4.5. It's not until it drops down to like 3.5 or below, maybe 3%. That's when in the condo market, buyers will really start to shift their mindset to think, hey, maybe buying is actually more worth it than renting. So we're still a long way to go from changing in the market from condo buyers' perspective. So that's why condos are very tough right now, right? And especially for pre-constructions, because if you bought a pre-construction during this time, you're not buying at the average price you see on the graph. You're actually buying somewhere around like this price, right? Because pre-construction usually have a premium on top of the resale market. So anywhere you're buying a pre-construction, you're likely paying a 10 to 15% premium on the price. So if you bought a pre-construction during these 3 years, you're likely paying around this like higher price range. And with the market at where it is right now, if you're trying to sell your assignment, you are going to see a big delta on the price that you bought it for versus the price that you can sell for. And that's why you see on the assignment market, there's people who are selling at a loss, and they're kind of selling, giving up their deposit because price dropped maybe like 10, 20%, and that's how much deposit is there, right? So all of that is gone. So that's why, you know, it's tough, right, in the condo market. But from the price, it's not the best way to look at the current market trend, let's take a look at other metrics such as the active listings. So active listings, if you see on the screen, 8,900 is how many active listings are there today as of the end of July. And this is the highest active listing number ever in the history of condo market. The last time, the peak of the market in terms of active listing was October 2020. Like that's when the COVID really happened and the condo had a tough time. Even then, we had not as much active listing as it is today. So almost 9,000 condo active listings. This is historically high, right? We've never seen this before. So where did this go from here? I don't know. I mean, September, October usually is another peak, right, in active listings. As you can see, like usually, let's say even last year, right? See, last year, 2023, September and October was high, right, in active listings. And even before, like usually September, October is not a low month of active listing. And if you look at when new listings come to the market, you will see usually September, see like last year September, like 5,000 new listings. And 2022, you see September had a little peak here at 3,500 listings. And even 21, as you can see, September is at this little peak here, right? 4,400 listings. So September usually is kind of like a small peak. Usually spring, there's a lot of new listings hit the market, but September, October is another small peak. So if you ask me, we are going to see another batch of listings in September and October this year. Plus, there's a lot of talk, right, about, well, there's actually data supporting this. So the number of pre-constructions coming into occupancy and closing is the highest this year, which you can see on this graph. This like highest black bar right here, it shows units under construction by planned occupancy date, right? So this is a big number, 50,000 units. So you can see like 2024 has the highest units planned for occupancy in the history of Toronto condo market. But I mean, not a lot of them will actually close or come to occupancy due to builder delays. But in the foreseeable future, you can see 24 and 25, we are going to have a lot of new inventory hit the market, right? Which doesn't help with the problem we're talking about right now, which is historically high record number of new listings, right? You can see like past number of years, new listings has sort of been trending up. And right now we're hitting kind of the second period highest in the history. The highest was during COVID, right? But during COVID, even though new listings were high, there were actually more buyers. So it was actually sort of canceling out. So that means the inventory was high, but not quite as high as today. Today, there's a lot of sellers, but no buyers. People call it the buyer's market without buyers, right? And that's why you can see like the active listing is so high and sales volume is really low, right? Like in July, we only sold 1,482 condos. If you compare historically, this is like a big downward trend, as you can see. People are just not buying condos, and especially the past year, right? So this is the reason why we have such a tough market in condo today. So which parts of the city are doing better than others? Let's take a look at the comparison between cities. So on the screen, you'll see all of these are popular city or parts of the city in GTA that have a lot of condos. This is counting the number of inventory. And as you can see, downtown Toronto, like this is by all means like the highest number of inventories of condos exist, and 2,600. So out of the 9,000 active listings, about like almost a third is in downtown. And then the second is Etobicoke, which is close enough to downtown. You can sort of call them all sort of downtown area, right? So more than a third is in downtown. And North York is another big source of inventory for condos at 904. So about 10% is in North York. And another sort of 8% of condo inventories are in Mississauga and Midtown, right? Midtown, Yonge, Eglinton, there's a lot of condos there, Sinclair. Mississauga, just like Square One, lots and lots of condo buildings. And the next highest is Vaughan, right? Vaughan and Markham, they have a lot of condos, but not as much comparing to the other areas. So Vaughan is about half of North York, and Markham is about like 300, and Richmond Hill, like this is kind of amongst the popular condo areas, they're the smaller inventory areas. Let's take a look at just as of July. What's the months of inventory between these areas? Because months of inventory usually it tells you what's the heat, or like how much of a buyer's market or seller's market is there comparing to these regions, and which area is hotter versus colder, right? And you can see out of all these condo markets, the hottest one, even though they're not, none of them is hot, right? But comparatively, the ratio between active inventory and buyers, like the ratio is called the month of inventory. And the best one is actually Mississauga. And Etobicoke, sort of second place. Midtown Toronto, they're at like 5, like 5.1, 5.5, 5.7, and 5.8, right? So these areas, Mississauga, Etobicoke, Midtown, and North York, they're actually sort of above average in terms of heat of the market, right? So it's actually busier in these markets. And if you look at the last few, the downtown, right? Richmond Hill, Markham, and Vaughan. These are actually the slowest, especially downtown, at 7.4 months of inventory. This is like, it takes 7.4 months to sell existing inventories at the current sales level. Even if there's no sellers, no additional sellers come to the market starting today, it will take like 7 months to finish all the current inventories. So you can see like downtown, by all means, it is still the slowest market, while Mississauga being the faster market comparing to the other ones. And in this last chart, I want to take a look at between June and July, right? Like this past month, which areas are getting more inventories, and the problem is getting worse, right? So in the last graph, we saw that Markham, Vaughan, Richmond Hill, and downtown, right? In general, their market is slower than average. And here's why, right? Here you can see, even during this 1 month between June and July, there's a lot more inventory added. Like Markham added 19.4% inventories. Like added 1 in 5 inventories in Markham was added in last month. That's a lot of increase, right, in the number of inventories or available choice for buyers. And that's a combination of reasons, right? Like a lot of new sellers, not enough buyers, and current inventories are sitting, right? So big increase in inventory level. And Vaughan, North York, Richmond Hill, they're all kind of the above average increase in inventories. So that these areas are going to take a bit longer to digest the current level of unsold units and wait for the more buyers to come in, right? Like it's going to be a tougher market for these ones. And the rest of them, Mississauga, they didn't add as much. Midtown, Etobicoke, that's why they were actually above average in the busyness of the market. And the most interesting one is downtown. Even though downtown is still ranked the slowest in terms of months of inventory comparing to all these other areas, downtown inventory in the past month has actually decreased 4.8%. And that's interesting to me because even though despite downtown being the slowest, the inventory this month is actually decreasing. And that means buyers are starting to notice the value of downtown. Okay, we can compare the price of downtown versus like these other areas, Markham and Vaughan. You'll see downtown price is actually not that much more expensive than these other 905 areas. So people are realizing the value of downtown condos more than before, and they're starting to pick up deals right in downtown, where some deals are even selling at $900 a square feet in downtown for like the newer buildings, and that's a deal, right? Like comparing to before, where everything was selling like $1,300 per square feet, and downtown still have all the bells and whistles and being close to work, close to everything, commute, urban city life. And Toronto downtown is a good place to live, right? Like personally, I do like downtown. I've lived in downtown before. I do enjoy that lifestyle, right? So I think people are starting to realize the value of current downtown market, and they're kind of returning to the downtown market to pick up like those few good deals. And that's why the inventory level is starting to drop, right? Which is just a good sign. And this is the chart I was talking about earlier. The blue line is downtown average price. The dark blue line is Markham average price, right? You can see over time, especially now, right? The average price between downtown and Markham is like the difference is non-existent. So if you ask me, do I want to pay a similar price between a condo in downtown or Markham for long-term value? I personally would still pick downtown, right? When Markham was like $200,000, $300,000 cheaper, yeah, Markham buying a cheaper unit would have been a better investment. But today, when they're like neck to neck on the average price, I think downtown is a better value. Okay, thanks a lot for watching. If you like this kind of content, don't forget to subscribe, and I will see you next time.